If you've been trading in cryptocurrencies for any length of time, you know that this market can be highly volatile. Because of that, it's vitally important that you have a plan in place ahead of time for situations in which volatility increases, and especially for situations in which the market turns against you. Today, I want to talk to you about one of the strategies that I use, that I put in place ahead of time in order to help me in just such a situation. This is Brett with Digital Energy, where we talk about Bitcoin, other digital assets, and the incredible digital revolution that is sweeping the globe. Today, I want to talk to you about my strategy of using laddered trailing buy stops to protect myself in cases of a down market. Before we begin, just a quick reminder, this is not financial advice or legal advice. This video is intended to be used for education and entertainment purposes only. Do your own research when you're doing your investments. And with that said, let's jump on in. Buy stops. The first thing that you need to understand about a buy stop strategy is what a buy stop is. A buy stop is simply an order that you can put in with your exchange ahead of time that says once an asset reaches a certain price, called the stop price, that will trigger either a buy or a sell. And in this case, we will be triggering buys. The benefit of this type of order is that you can put it in ahead of time. It can be good until you cancel it. And once the underlying asset reaches the buy stop trigger, you will buy at the limit price that you set at that price. And so this can help you accumulate an asset in highly volatile markets when the markets are moving, or when you're not being able to watch the markets 24 hours a day. So how do you place a buy stop order? Well, the first thing you need to know is that not all exchanges or not all exchange platforms support buy stop orders. For instance, if you're on Coinbase, I have a number of Coinbase accounts. One is kind of a standard account. The standard application that you use on your phone for Coinbase does not support placing buy stop orders. You would need to upgrade to Coinbase Pro, which is very easy to do. You simply log into your Coinbase Pro account, and the screen that comes up, the default screen, is typically your order screen with the order frame over here on the left-hand side. Here you can see we've selected Bitcoin in US dollars as the asset that we're dealing with here. And order form. Here we can buy, sell, and we can buy or sell using a market order, a limit order, or a stop order. In this case, we want to enter a buy stop. Then we determine where we want our buy stop to be. Here, the current market for Bitcoin is just a little over 35,000. So let's say that we wanted to put our buy stop at 34,000. We would go down here, we'd type in the stop price at 34,000. We would say how much Bitcoin we want to purchase once the stop price is reached. Let's just say 0.01 of a Bitcoin. And then it asks for a limit price. Now, I usually will set the limit price the same as the stop price. Some people make it a little bit higher than the stop price. The only thing you need to know about the limit price is that once the stop price is hit, the limit is the maximum you will pay to execute the order. And so I just always put it at the same price. If the price continues down, you're going to pick it up. So let's just put in 34,000. And then of course you just hit place the order, and it will place the order. Coinbase and just about any other exchange will charge you a small fee. And that order will stay in place in your order box until you cancel it. And so the minute that the Bitcoin price would hit 34, it would trigger a buy at 34,000 and it would automatically. Now, you might ask, well, how does this help in a volatile and down market? And why do I use them? Well, the reason that it helps is, again, I don't have to be sitting in front of my computer to execute these trades. I have implemented a plan beforehand in the case of a drop in the market that will execute automatically without me having to do anything but simply look back and see what happened. And of course, when I'm talking about laddered buy stops, what I do, my particular strategy is that I have four rungs of a ladder at varying trailing price points. And when those price points are hit, I will buy automatically, and then I will set a new rung so that I always have four rungs of the ladder underneath the current price. And so let's take a little bit of a look. I've got a chart up here of the daily price activity of Bitcoin, and this is a really good example. You may have remember a few days ago I posted a video where we were talking about the price in this area where it was kind of bouncing around between 41 and $44,000. I thought at that time and came to the conclusion and opinion that Bitcoin would probably not drop below 40. There was a lot of support in the 40 range, and it had held that range for a number of days. Now, ultimately, I was proven wrong, and to be fair, I did say in that video that I could be wrong, because anyone can be wrong. There's nobody that can guess exactly where the markets are going to go. And I mentioned that if Bitcoin's price dropped below 40,000, that there would likely be a pretty strong move further down. And that's ultimately what happened. You can see here that that happened on the 21st of January. So what did I have in place even back when I was thinking that Bitcoin would go higher? Well, I had these first four rungs of buy stops set in place for just that eventuality. My first buy stop was set at 39.8, just under that $40,000 range that I felt was support. The second one was the 38.5, the third one at 37, and the fourth at 35,700. So let's go back and see what happened. I'll click over here to the hourly chart so we can see it a little easier. So here on the hourly chart, we have that price action starting here back on the 20th, where I made the call that I didn't think it was going to go lower than 40, but wanted to maintain, some strategy just in case it did. And so we can actually go back and watch this happen in real time, hour by hour. So here we go. We'll click forward 1 hour at a time with my buy stop. So here we go. The first time my buy stop was triggered was about 1 a.m. on the morning of January 22nd, or January 21st, 2022. I was in bed asleep. I had these buy stops in place, and I was in bed asleep, and when the price hit right here, it triggered the buy, and I purchased some additional Bitcoin. Now, another few hours goes forward, you can see again, we drop lower. And my second buy stop was triggered, and I picked up a little bit more at that 38,500. And as we click forward in time, the price starts to bounce around. And now we're sitting here at about 9 o'clock in the morning. I've gotten up now. I looked at the markets, and I saw that these two buy triggers were triggered. So now I only had two more ladders. So what I did immediately that morning, once I learned that, is I set these two new buy triggers, buy stops. One at 33.5, one at 31.4. And throughout the day, I went off to work. I tried not to look at the markets, also, although sometimes that's difficult to refrain from doing. But what happened? Well, it continued lower throughout the day, and pretty soon you'll see we ended up triggering another one of the buy stops at $37,000. Once that triggered, and I found and I learned, I get a little alert. I go in and I set another buy stop because again, I always want to have four. Uh, and did that. The next hour, we hit another buy stop, 35.7. And so the beautiful thing about this is that I put this plan in ahead of time. I was feeling just like probably a lot of you were at this point, a little bit of maybe fear or anxiety about the positions, but I remember, it helps me remember my long-term outlook for Bitcoin, my long-term holding perspective, and I try to remind myself that, hey, I'm buying Bitcoin at some great prices now. So time went on, and you can see since then, as we look at this, it's bounced back and forth, and we're kind of maintaining right at that $35,000 level. But I still have my trailing buy stops, my laddered trailing buy stops here to pick up some additional Bitcoin if the price continues to drop. So the question then is well, what's the benefit of that? Well, by doing that, one of the mathematical benefits, of course, is simply that you're buying more at lower prices, and that is allowing you to dollar cost average in, bringing your break-even point to a lower and lower number. And over time, as the price recovers, you will recover even a greater amount than you theoretically lost on paper during the downward trend. The other more beneficial characteristic of these trailing buy stops is that uh, it helps me to avoid the fear greed psychology. There are so many people that will succumb to that, where let's go back and look. Here's a great example. You know, here Bitcoin's just running up here in January of 2021, and people, it starts to go kind of parabolic like this, and people say, oh yeah, I'm going to buy, but not yet. It's so high. It's so high. I'll buy the dip. Then it dips. You have volatility, and they get scared. People get scared. It's human nature. And they think, oh, it's going down forever, so they don't buy. Then it rises. And again, oh, I'll buy it on the dip. When the dip happens, the psychology of fear says, oh, it's going down even more, so I'm not going to buy. And so they're constantly missing, or even worse, you might be scared into selling at the lows or buying in with a fear of missing out at the peaks and ending up with a portfolio that has either a lot of losses in it or has a far higher break-even point and basis than you would otherwise have. So by putting in these trailing buy stops, being disciplined, always having them there, not getting scared into removing them at the wrong time. Once they're in, you should leave them in there forever. And if you pick up the Bitcoin at those prices, you should tell yourself, hey, you just got Bitcoin on sale. It's important to note that this is a strategy for a long-term hodler type mentality. If you're a swing trader or short-term trader, this may not work for you. But if you're someone who believes in Bitcoin as I do, that it is going to be essentially digital gold, that is going to rise in value because of its technology, its limited supply, etc., then this is a great way to continue to pick up additional Satoshis at bargain prices, and to keep dollar cost averaging your basis, your break-even basis lower and lower. That's all I have for you today, folks. Best of luck in the markets. Don't trade emotionally. Protect yourself out there.